pick up in terms of volume as well. At the moment, very, very tepid volumes, but very positive for the markets. I think before I complete the sentence, if I can make it sufficiently long, I would have the bigger indices already in the green. If not, in another 5 minutes, the way things are at this point in time. So let's take one stock which has been picked by several brokerages. I have Nomura and Edelweiss in front of me, but several brokerages are identifying it as a buy for several reasons. Joining me now is the CEO of that company, Sunil Dugal of Dabur India. Mr. Dugal, thanks much for joining us. Take us through how the second half is panning out. Indeed, in fact, the first 6 months of 2011. How do you think the company will do in terms of sales, and how do you think the company will do more importantly in terms of margins, since inflation is turning out to be a little worse than we thought?
Yeah, I think the sales side seems to be under control. Demand is robust enough, and we further expect acceleration coming in the fourth quarter. The margin is a little bit, as you said, more worrying. The inflation continues, seems to be abating a little bit, but not as much as what we would like. So margins continue to remain under pressure. Hopefully in the fourth quarter, with a good harvesting season coming up, we should see the margins pressure ease a little bit. But as of now, they still remain fairly severe.
Okay, let me begin with some numbers and first start with sales. How do you think, your second quarter, while it was good, was not as well as analysts were expecting it to be. How would you do in terms of the second half performance, in terms of a revenue growth, as ballpark a number as you can give?
Well, a ballpark number would be in the mid-teens, and I'm looking at organic growth, of course, here. It would move up a little bit on account of the two acquisitions. But mid-teens is a fairly acceptable number, which, as we see now, we would like it to be in the high teens, but that may be a little bit difficult to achieve.
And what about margins? Do you think you're going to see some pressure? If so, how much? If you can quantify the kind of pressures you expect.
See, we would expect gross margin compression to be in the region of 200 to 300 basis points over the same period last year. I think the challenge in front of us is to maintain the EBITs at close to last year levels, which so far we have done, and we believe that it's possible to retain the same EBIT margins by better management of cost. But certainly there will be a gross margin compression. There's no way we can help manage that part.
And how many? Would that be 100, 200 basis points?
Yeah, it'll be 200 to 300 basis points.
Okay. And does that factor in some kind of immediate price hikes? If so, how much?
I don't think there's going to be any radical price hikes. There could be some moderate imbalance corrections here and there, but we are not looking at anything huge. Coconut oils, we have taken up prices in the Vatika range, etc., because of the unprecedented increase in the copra prices, but that's a little bit one-off thing. Mainstream categories, oral care, hair care, etc., health care, for example, we really haven't taken up any prices, and nor do we envisage us doing so unless there is some very major increase in the price of a certain raw material, as in the case of coconut oil.
Okay. Well, two strategic issues which you had discussed in your previous conference call with analysts. Let me begin with the first of them. What kind of input alternatives are you looking at? There were several analysts who told us that that might protect your margins. Is there something afoot that will at least help in maybe forthcoming years?
Well, incrementally, yes. I don't think changes in mix really impact margins in a huge way. In hair oils, we do have the option of changing the blend so as to use a cheaper blend, lower cost blend without impacting any of the product attributes. But in other categories, it's very hard to reformulate. There is perceptible changes in how the product looks like after you make these changes, and often they are not for the better. So we prefer to bite the bullet short term and maintain product quality and not do anything significant other than, like I said, in hair oils and a couple of other categories.
All right. Acquisitions, what's on the plate? We were a little surprised that you didn't make it for Paris. Would you now be very hot on the trail for some other acquisitions? Will we hear from you before the year is out?
I don't think so. I think these two deals are enough to carry us through to the end of the year. The Namaste deal particularly is not yet fully concluded, but hopefully it will be by the end of this month. And that would take a lot of effort on the part of management, particularly international business management, to aggregate the two businesses and to move them onto a positive trajectory. So we are not looking very aggressively at new acquisitions. However, something attractive comes along the way, we would definitely take a hard look and maybe do a deal, but I would tend to think it's unlikely.
Okay. Mr. Dugal, finally, what is really the growth strategy? If you have to pinpoint in terms of, say, a product or a penetration or an international market, what would be, say, Dabur's strategy for the next 12 or 24 months?
I think increasing focus on rural India. We see a lot of upsides and a lot of positive signs coming out of that market in terms of growth. We are very entrenched there. We've got great infrastructure, so it'll be silly on us not to leverage that. And then overseas, particularly Africa, that's a little bit longer term horizon. I don't think much will happen in the next 12 months, but certainly in the next 2 to 5 years, we see a very large business emerging out of sub-Saharan Africa in particular. So these are the 2 areas of focus, international in general, Africa in particular, and rural India as far as the domestic scene is concerned. I think we will derive a majority of our growth from these areas.
Right. One final question, and actually pretty minor. What would your ad spends be, you think, as a percentage of sales? In the region of 13 to 14%. We've been able to cap them, I think, reasonably well this year, given the competitive pressures. So they are likely to move north of 14%. All right. Sunil Dugal, thank you very much for joining us today with all those details. So that's consolidation time at Dabur. The acquisitions have been made, not really hot on the trail, but time to milk more from what they already have and perhaps from rural markets. Let's take a break. Thereafter, we turn to the IPO market, or rather the new listing space. It's not been a good day for Claris, but it's not been as bad as it threatened to be at the start of trade. We'll speak about the stock, about the company, about the future in a minute.